BTC rips higher on a weaker dollar and position unwinding ahead of the ETH merge this week. Vol looks elevated ahead of CPI and FOMC, but risk remains high as a sell the news moment may be coming. All this and more in this week's Crypto Insight. All right, so crypto this week, pretty strong rally in Bitcoin last Friday. So we were flagging this support zone of 17.5 to 19K. We entered into that, also happened to be the sort of lower Bollinger Band area. And then boom, we had that pullback in the dollar and Bitcoin just catches fire and rallies 10% in a day. And that's a 4 sigma move in one day, right? And then it was up around 13% on the week until the latest little downtick that we've seen on CPI, right? So very, very strong move in Bitcoin, bigger than we've seen in a long time. I suspect it was benefiting a bit from position squaring ahead of the merge. Obviously, the merge is due in the next sort of day or so. And, you know, I think a lot of players who were long ETH had been short Bitcoin against it. And now they're getting to a point where they're either closing out their ETH and needing to buy back their short leg, or they're just kind of, you know, don't want to be left. They don't mind running the long leg for the merge, but they don't want to just be short Bitcoin. So anyway, Bitcoin seeing some short covering price action there for sure. Okay. In terms of technicals, you can see we have pulled back, but you know, assuming that rally was going to continue, 24K was going to be a big area of resistance. And then if that was broken, then 28K was going to be an even more formidable one, right? So that was kind of the major levels to look out for on the upside. Obviously, we have pulled back best part of 5% intraday. So, you know, who knows? We're probably going to find that support level kind of around, just below 21K basically is where it comes in, probably another 2% below here. You'd think there'd be some short-term support basically. Okay. Right. If we then look at Ethereum, just looking at the Ethereum chart first by itself, you know, the price action was looking a little bit ropey. Obviously not managing to making lower highs from the, you know, where we got to in mid-August, and now starting to kind of roll over a little bit. Very strong resistance in that area of sort of 2000 to 2150, but even the 1800 resistance kind of proving too much for the latest move. Now, obviously, we've got the catalyst of the merge, so anything can happen. In terms of downside supports, I'd be looking at 1400 as a big one. If that gets broken, then that does certainly open up the way for a retest of 1000. Okay. So in terms of absolute ETH price action, those are the levels you want to be paying attention to. If we look at the cross, ETH Bitcoin cross, that has obviously pulled back quite a bit from the high. So it got within a whisker of my blue sky target. So I'm going to say I pretty much called that target, right? That was close enough in my book. And then now it's kind of retraced to this level, breaking. If it breaks it, and it looks like it is breaking it, then the next level's down here at 0.072-ish. So where are we now? 5. So, it's about sort of 30 cents. So what's that going to be? About 4% away. So you could get another 4% underperformance to get us back down to this support, which is probably quite a big support level for the cross. Obviously, whatever comes out on the merge, probably going to be a load of flows that hit the market. So we're probably going to see some craziness and some volatility. That's to be expected. But when the dust settles, we're going to zoom out and look at this chart. And I wouldn't be surprised if we're not a million miles away from where we are now, right? So I think maybe, we'll probably be closer to this level here. But yeah, that's kind of my suspicion, basically, especially if the macro looks a bit ropey, like it does at the moment after that CPI report. Okay. So that's kind of it in terms of the charts. If I then take it to the vol. So looking at realized volatility in crypto. Okay. So we've got our good old G-vol charts here. What do we see? We see a decent uptick in realized vol, obviously on the back of that 10% rally. So Bitcoin went from kind of sub 40 realized to closer to 60 realized. Okay. Whereas the implieds have continued grinding as well, grinding higher. Okay. So implieds have now got, weekly's got as high as 80 vol. And they're obviously pricing in some event risk for the CPI as well. which has proved to be justified. Okay, so the carry, even though the carry was still pretty elevated at around 20 vols, you know, that implied premium was justified because the market's just had a 5% move, basically, right? So you're gonna see that realized volatility kind of continue grinding higher, and you're probably gonna see some reset in the implied. So those are gonna converge, and they're gonna converge probably more after the FOMC, but you're likely to see some convergence now after the CPI. Now, if we look across to the right, where Ethereum, we see 10-day realized actually continuing to grind lower. So 10-day realized kind of comes sub 70, whereas on the flip side, implieds have continued grinding higher, just like Bitcoin, and they're at like 120 in the front. So you're seeing a massive divergence between, and so look at these carry numbers, right? These red bars represent the amount of carry. It's like over 40 vol points of carry, for crying out loud, in Ethereum. It's like, this is the most you will ever get in terms of the carry, right? It's 99th percentile type numbers. It's unbelievable, okay? And that makes an even stronger case for my huge vol reset idea that we're going to get post-merge, because this vol is just so damn dislocated from what it's doing, right? That you would need like a 20-30% on the merge to justify that, basically, right? So let's see if we get that. I suspect we won't. And you know, I'd expect this carry to come crashing back in as implieds go down in Ethereum. Okay, so that's kind of what I'm seeing on the realized front. If we look at term structure, we've got these charts here, which you've seen obviously before. The green is today, the white is last week, the gray is a month ago. So you can see Bitcoin's flipped to an inversion because the gamma has caught a bid because the market's moving all of a sudden. So that's not really a massive surprise. You'd expect that inversion to kind of collapse back down once the events pass, and once the market's found some kind of stability and some equilibrium again. Ethereum also inverted, obviously for a slightly different reason with the merge. It's been like that. It's been trading much flatter or inverted for a while. I mean, it tried to go towards contango last week, but that couldn't sustain. And so we've seen this front end spike to 120. Now, the interesting thing is obviously the Ethereum versus Bitcoin volatility spread and the term structure of that spread. We see that pretty inverted, like quite uniformly going in one direction. The weeklies are the ones which are trading near 40 vol spread. So that's implied. Ethereum implies 40 vols above Bitcoin. Now, if you look at the realized spread, the 30-day realized is at 25 and the 10-day realized is now at 9. Whereas the implieds at 40. So that's how much volatility risk premium there is in ETH vol relative to Bitcoin vol for the merge, basically. Right? So what now? Whilst this weekly is pure gamma, and if you trade this spread on the at the money strikes and the market moves 20% away, you're gonna have no Vega left. So it's not really a vol trade anymore. So that's why where you want to trade this vol, and this is what I was talking about last week, is you want to go to like December expiry, which is, let's say, somewhere around this area here, which is still trading in the 30 vol region, right? So that can easily go down to 20, if not 15, right? So I'm looking for this area to reset down there, basically to be more in line with what the realized is now and what I think the realized is going to be going forward, basically, right? So, and you know, we can see this even more clearly on the on this chart here, where we've talked about it before. You know, this is 6-month history. And it's just kind of showing you where this came from, right? This spread got to 0 in May. It rallied up to 30 odd. And, you know, across all the different time measures, weekly, monthly, 3-monthly. I mean, this stuff does not live up here, right? It lives somewhere between 10 and 15, I believe, right? So very big vol reset to come this week in Ethereum, if I'm right. And yeah, you guys know what I've been up to play that, okay? If we look at skew, we saw a collapse in Bitcoin skew. So you see the green line collapsing on the 1 month, also on the 3 month. So now ETH skew trading well above Bitcoin skew because everyone's piled into calls on that Bitcoin break higher. So the skew flattened a lot in Bitcoin, but it didn't do the same in Ethereum because everyone's like holding on to their put protection for the merge and doesn't need to chase the upside because they're long the underlying, right? So that's kind of the difference in dynamic, right? People were shorting Bitcoin and were actually, I want to buy calls on Bitcoin to either protect that short or I'm covering shorts and I'm speculating with new calls. And that's why you're seeing this collapse in Bitcoin skew on a relative basis, okay? I do think post-merge, once the dust settles and we know what's happened, then I think some of those long puts on ETH will probably be unwound. Those hedges will be taken off as if people take profit on long ETH positions or whatever. So you have got the potential for the ETH skew to kind of normalize back towards Bitcoin skew if Bitcoin skew stays where it is. But to be fair, Bitcoin's just collapsed 5%. It might be that skew just jacks straight back up and everyone rushes back towards puts because the market's so damn fickle, right? And it's so spot reactive. So, remains to be seen. Given that the macro backdrop is kind of unchanged and we're looking at tighter for longer, we're looking at high and sticky inflation. Yeah, you probably assume that the need for macro hedge is going to be there. And so skew's going to go, if anything, Bitcoin skew is going to catch back up to Ethereum skew and they're going to stay elevated for puts given the macro. Yeah, so that's kind of how it seems to be setting up. Yeah. Okay, so that's skew. And then obviously in terms of my trade, ETH Bitcoin. So I'm as the market had been drifting higher, my plan was always to kind of scale into this and then roll up strikes if need be. So certainly for the protection. So that's kind of what I've been doing. So if you were to pull the trigger on this trade now, well, obviously the market's dropped 5%, right? But let's say before this latest move, I was looking at a December strangle of around 1,400, 3,000 kind of strikes. And you can sell more puts if you want to be a bit longer delta, or you can just do it equally. So that was going to be the December short strangle. And then the idea to hedge it was going to be October 20K puts now, roll that strike up a bit. So the October 20K puts in Bitcoin. And then you can also use some super short dated Ethereum protection, like the 1,600 puts expiring end of this week. Or I also did some 1,600, 2,200 risk reversals expiring the following week, the 23rd of September, because I was a bit more comfortable that even if the market rallies, I think 2,200 is going to be quite a formidable resistance in the short term. So any knee-jerk rally is going to get faded. So I don't mind selling those 2,200s to fund some of the put protection that I need in case we go down to 1,000. So if we go down to 1,000, then I'm going to get hurt on my short vol in December. So that's the protection that I really needed. So that's how I'm managing my position and how I'm managing my exposure in that short Ethereum vol trade that I still have on. Yeah. And then the last page to talk about is obviously crypto flows. Already saw and mentioned, right, a load of call buying coming in. So massive domination of calls, about 2-to-1, both for Bitcoin and Ethereum in terms of like calls dominating the flow. What did we see? We saw short dated calls like 16th of September. These are all the white bits, kind of strikes, anywhere from 20 to 25K. The big clips in September, this is the red one. So you had September, end of September, 25K and 24K calls being bought in size by some fund. They were also selling out some Octobers to finance that, to keep the Vega risk down. So you see the green there is like the 2,800 and 3,000 area. So that was being sold to basically offset some of the Vega exposure of these Septembers. But nice thing about that position is you don't take on too much Vega risk, but you basically have a load of explosive delta and gamma if the market breaks higher, because your short dated options are the ones that really catch fire because they've got the gamma, and your longer dated higher strike options are more Vega and just kind of don't explode quite as much. That's the idea, basically. So that's the trade the person was doing there, whoever executed that. Also seeing some June 23 upside buying in the 40, 45 and 50K area. That's the orange ones there. Okay, so generally very, very bullish, very dominated by bullish flows in Bitcoin. Now that may well completely reverse now the market sold off, but we'll see. If you look at Ethereum, we saw a lot of local gamma trading. Obviously, all the blue is the 16th of September. So that is the event bucket. It's going to contain the merge, and people are probably rebalancing that gamma like crazy to get themselves, not too exposed to whatever the gap's going to be, if there is a gap even. We also saw some sellers of December call spreads, 2,000, 2,500 call spread in decent clip. And then in terms of the buy side, we saw September call spread buyers. They were more like lottery tickets, the 2,500, 4,000 call spread, and also the 25 calls in November being bought as well. So a fairly mixed bag in terms of directional, bit of selling, bit of buying, and then a load of action in the front end for just sort of rebalancing gamma positions there. So those are the flows that we saw in crypto this week. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video, and for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.